Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. Here we go. It's Monday, Monday, Monday. Let's see what they got going on today. You can see there the dollar index up on J4X. And let me also check. Oh, I hear me. Yes, I do. Excellent. Let's kill some of that volume. There we are. Cool. All right. So, I hear me, so that's a good thing. I don't see anybody on the chat line at the moment, so that's sad. I'm sad. And but we will talk the markets because I just have to believe that there's somebody out there, and I am not just laying in this nursing home, fantasizing that I do a webinar. Let's see. So there you are. There's the dollar index, and it's busted through the 5 now. Yeah, and we're like, okay, it's like those interest rates, as we talked about last week. We really didn't think we were going to see the 5s. Maybe stall out, maybe get the 5. But we really thought this was done. But then the interest rates and the market was fooled, and we've talked about this last week. Normally markets follow the bond market. In other words, equity markets, currency markets follow the bond market. But for, I don't know, a couple months, they just refused to pay attention to them. As we take a sip of our tea there. And so the bond traders have basically said, nada, buckus. They're not interested in, all this, interest rates don't have to go up. They can keep on falling. Or this is the end of the increase. No worries, mate. We're just going to, go down. And that's what they learned, that doesn't work that way. And so the bonds, in the end result, as usual, are the leader. And the bonds were telling us that we were towards the end of the rise of interest rates. And then the bonds turned around and said, no, we're not. And the stock market said, I don't care. You're wrong. And they have learned that the bond market is always right. Always right. IVB, where you been? Welcome back to the hood. So bonds have been, going up in price. We have 5% bonds here in the States now. And everybody was convinced that the markets were totally convinced. Que pasa? Have you been via Candias? Have you been traveling in peace? Has it been a good adventure you've been on? What's been going on? Have you seen anything? Has there been good action in any particular area of the marketplace? What do you think? I think I myself have been just amazed how much the bonds were disrespected and the interest rates were disrespected. And que pasa? And, in the end result is that the bonds, as usual, always do win. And they have. And we've seen, from Switzerland to Germany to, even Japan has some bonds trading with a plus. I know Japan is like the last of the holdouts. It's I think their 10-year and their 20-year is trading for like half a percentage point. But I believe they're still in the minus when it comes to the 3-month, 6-month. So they're still trading underneath, which makes no sense, obviously. But then that's what it is, that's the way it's been. Now you can see, around the planet, we see 3s and 4s. Some places we see 8s and 9s, but we do not, we don't see a lot of action. They're just not willing to accept the idea. That's central banks. It's a war between the bond traders and the central banks. And bond traders know that they have to be a little careful because the central banks have a lot of power to raise prices, to float lots of bonds and disrupt the market. And they can basically go in and buy bonds. The central banks are buying bonds and parking them. That's why they were minus in interest rates for a long while. Governments don't want to pay interest on money, so they made people actually pay them so that they could, borrow their money for free. So that is what we see at this point. And you see it in the dollar index, and you see it over on Chicago Quant. Same thing over here. Where's that mousey at? Right there. You can see this is the dollar index here, and you can see it's been in a buy, and it's been pushing up. We're in a weekly buy now for a bunch of weeks. You can see the fast-moving algorithm has been over for is it 2, 3, 4, is it 5, 6? Looks like it. You know, it's been over the top for a while. 1, 2, 3, 4. This is the 5th week, and the slow, not old, but the slow-moving algo has been in a buy for 3 weeks. So they're obviously, as this rises, that means that interest rates have been moving up. Really, that's pretty much the way it works with the dollar. As the interest rates move up here in the States, the dollar gains in value because money likes to get a return on. You know, people don't invest to lose money; they invest to make money, and so that's half the game plan right there is that they want to make money. All right, let's go over to, where do we go over there? Let's go over to the euro. See what the euro's up to this morning. And it's right there. And there's the euro. Oh, that's cable. Let's go to the euro. I was curious. I wanted to see where it was. I actually looked ahead. Normally, I don't even look unless I'm trading. You know, I pay attention to euro more than anything else. Euro, you can see, it's been in a sell from here. You know, it's been doing this slow, steady drive down. That is correlated perfectly with the bonds when we go over and look at bonds right here. Let's put the bonds in, and you'll see that the interest rates have been rising. Like so, there's our 30-year. And so as the price of a bond goes down, the interest rate is rising. So when a bond's price is dropping, interest rates are rising. And so that's what this has been all about right there. And you can see it's been that long slide down. And you can see that was on, was at the February 2nd. And when we go over and look at the euro again, right here, if we can get our mouse to go that way, there it is. That was that the third? That was the second there. That's the second also. Notice that's the top. And that's what happens is that they scare the other products. You know, the increase in cost usually freaks them out. That's usually a good reason. Increase in cost. I mean, you buy less when things get more expensive. That's what it comes down to. Or you invest in it, one or the other. Now, from there, let's put it up on J4X, and you'll see right there. There we are. You see the same thing going on. It's been dropping since that second, or is that the fourth? Either way, it's right up in there. It topped out at the beginning of February with the interest rate shift, and you know, we've been watching these products move in that direction, and that's what they're going to keep on doing. Now, from there, we slide over to cable. Let's see, cable, right there, and right there. And cable's been drifting a little bit here, but as much as you can see on the euro here, you know, the euro is still not, I mean, I guess they're challenging this area, but overall, you know, it's the same way with cable. They're making challenges to areas, but they're not, it's not dramatic, you know. It's not dramatic. It's not like, you know, when we squeeze these things, you can see they've had some interesting runs coming in from like the 103 area all the way up to the 120-ish area, and now they're just hovering in the 119s. I mean, that's not, I mean, it's not Turkey-like, let's put it that way. You know, where we've seen Turkey, you know, product flies all over the place. What else can we say about the cable? I guess that's about it. And when we look at it on a weekly basis, as you can see, we've been in a weekly sell here for, what is that, 1, 2, 3, 4. This is the 5th week in a weekly sell. Let's see what the weekly looks like over here. I'm sure it's the same way, just rolling and rolling and rolling. And here it comes. Lots of red. 2, 3, 4, 5, just the same way. The pressure is on the downside. And you can see here, it's down. The fast moving stochastic and the slow moving stochastic is recognizing the pressure. Recognizing the pressure. It's down at the low end of its range. It's what else can we say about it? I guess that's what it really comes down to, is that it's, as you can see here, it has notice this low here of the 103 and change. It really drifted below the 0 line here, or I guess it's the 20 line, and that's the 80 line right there. So it drifted down to it and then started to turn. You see the little green there, and sure enough, they got some legs and got going. And it looks like to me they're building a bottom in here, and this is going to just be a reverse head and shoulders, and they'll find a way to get back up into here. And I guess that is insinuating that we will see interest rates tail off. They'll stop rising and they'll just go sideways. And then from the sideways, when they start to see an economy growing, the interest rates will stay sideways and the economy will grow, and then maybe we'll see more action on the cable, and we'll see weakness on the dollar. Right now, they run to the dollar because it's the only game in town. As much as some of these people in the world are very confused about world economy. Like, I would say that the Russian government is totally confused by world economy. I would say that the Chinese government is totally confused by world economy. I would say that Europe, parts of Europe, are confused about how the world economy really functions. Probably why they want to take control of it, because they really hate the idea of being wrong so many times, And that's usually seems like that's the recipe to it all. You have your pockets like Poland and Hungary and Slovakia and Czech Republic and Bulgaria and Romania and so forth are trying to, Latvia, so forth and so on, all around the old Eastern Bloc, I guess you could call it, are very comfortable with profits, making money, law and order, and then you have France and Germany and so forth, and Italy and most of the old European Union part, just kind of still trying to be socialist on some level or another. They can't get into the groove of growth. They're just not there. They don't know how to relate to growth. They only know how to relate to socialism. It's odd, since they're on the doorstep of it. I guess it's one or the other. It's a combination of a simulation or steady state in physics, we call it, or maybe it's growing pains. But most of the old European countries have really moved away from capitalism, and they kind of constantly banging against that wall of no growth and low growth, and at the same time, European Union is the second largest economic system in the world. So, China, as much as they want to pretend China is, it is not. But it's like $21 trillion economy, even with the backwardsness. But then you would have to assume that you're seeing a lot of the young, new European Union countries are like Poland is something like the 5th or 6th largest country in Europe. But at the same time now, it's the second largest industrial nation, because they're practicing capitalism. And boy, the European Union really hates that, which is really odd. But they do. They hate it. All right, let's go for another toast of the tea. Alrighty, that was my my out loud point of view of why we see the dollar up at 105, because there's no other game in town. All right, let's swallow this tea and get going. All right, from the cable, we'll jump over to is it the Swiss? Yeah, I think we go to the Swiss. Right there. And this is the weekly Swiss. Let's put it up over here. There it is right there. And you see we've been in the daily buy all the way back like a couple of weeks now. This is the third week. Weekly buy, same thing. This is going on a third week. The pressure is up. Um, Not expecting a lot out of it. Impressive that it's moving the way it does. I never really thought I was going to see the Swiss jump back and forth the way it does, but it has been. I heard something about Credit Suisse a couple days ago. It was like on Saturday or something, but I missed most of the story. But it was fascinating what I did hear. It was a real pounce. They really pounced on the bank. It's got problems. It's probably, like I said before here, it's probably the Deutsche Bank of chameleon. Yeah, I know what you mean. Yeah, exactly. I want to look at it more like physics. Steady state. And what happens is that in physics, one of the descriptions of steady state is that you take a brick, some object, and you put it in an oven and you heat it up at like 400 degrees. And then you take another object and it's been just room temperature. Okay, or maybe it was in a freezer. You put it in a freezer, and let's say it's below Celsius. It's below freezing, and then you put it in a room on a table. All's in the room is the door and no windows. Okay, you set that as two objects. They're the same objects, so they have the same density and so forth, but they've just been treated differently temperature-wise. And you put them on that table, and then you close the door, and then when you come in, they're both the same temperature. And over time they become the same temperature. And so I think when you have this constant confusion and this constant war, I mean, Europe, as much as it tries to be peaceful, has been the center of war now for over 100 years. In the industrial age, and so they've got a lot of issues, and and freedom is not exactly one of them. They don't want to practice freedom, and in other words, everything has to be steady state. The people, you have an education, have a PhD, and the next person has a no education whatsoever, and they want them to get the same pay equally. They want them to be treated equally. And so one size, what it really comes down to is, and I always say it, I say it to a lot of friends and so forth, and people in business, there's a problem. People think one size can fit all. In other words, if you just take away from somebody and give it to somebody else, that's going to make everybody equal. That doesn't work that way. But they have that fantasy that they think one size can fit all. So everybody should wear the same shoe size, the same color clothes, maybe have a couple different color clothes, 2 or 3 colors. But how many colors are in the color spectrum? Almost infinity, right? So, that's the problem, is that they're really, you should look what the European Union is doing to Poland. They're constantly fighting with Poland. Poland now is the second largest industrial nation in Europe. And you would think that they would give them a attaboy, hey, great job, you're doing fantastic. Keep it up. Instead, they're suing them and trying to stop them from being capitalists. And so I think what it really comes down to is Europe and most of the world are absent of history. They really are. They have some type of short-term goals all the time that do not match reality. I think that's what it really comes down to. And then you slide over to the financial markets and look at them in the same way, and you realize how much they're not connected to reality. And that's what it comes down to. It's very odd, and like the bond traders have been totally the opposite of the rest of the world. They've benefited enormously. Governments foolishly tried to keep interest rates at zero for a long time. Not only did they keep them at zero, they kept them at minus. And we're seeing it here. You see it through inflation and so on. That's what it's all about, is why we see so much inflation. It's a combination of a lack of growth and irresponsible governing, thinking that they can control markets when you can't. So now prices are rising. One size does not. What it really comes down to, one size does not fit all. It's as simple as that. Nothing more than that. So, All right. From the Swiss, we'll jump over to the yen. And the yen, you can see there, same situation. Really firm. Been climbing up for a couple weeks. Daily's been in a buy. What is so unique about the Swiss and the yen is how much the two of them are marching along in lockstep together, which is very, very odd to me. I rarely ever hear anybody talk about the fact, and Japan is a closed type of society. It's the old industrial base of the last half century. Ever since we dropped a few nukes on them, it's just they've been kind of a very productive, less warlike country, and they manufacture incredible amounts of neat things. And then China slowly gravitated towards that same position, and it looked like they were going to become like the next big big Japan, but instead they have not done that at all, and they're they are who they are, and in the end result is that it doesn't make a lot of sense, and it's going to change. Obviously, I mean we have a trade, we trade overall last year was $527 billion. I mean, nobody's seeing that type of number, on the planet besides China. And the question, Mr. Trump started to reel them in, and then somehow or another a virus came out from their country to stop the world. And so now we're starting to understand that more, and we'll see how that all plays out in the end. But you can say one thing: when you look at their markets or the lack of currency that they have, they don't have a floating currency, and they don't have their equity markets are about 60% down from all-time highs. Obviously, they're like Citibank. They're in the hole, or they're like Credit Suisse, or they're like Deutsche Bank. China is identical to them in the sense that they're not really growing. They're just, kind of just surviving, I think you could say. So, from there we jump over to the Turkish lira, where the earthquakes have been occurring. That is, and we're going to get hit again. Spoiler alert, more earthquakes coming in the next 24 to 48 hours. So we're going to be getting hit with a lot of interesting weather. We're getting a lot of protons and electrons coming from the sun. The sun is really active, and we are what we refer to in science as solar maximum at this point, and we haven't even reached it. We're still a year and a half away from it, and it is kicking and much stronger than the last one of 11 years ago. The sun goes through a cycle. Every 11 years, its north pole flips to the south, and its south pole flips to the north. Their magnetism switches, and they go into this really quiet period, and then it goes back into a cycle where we get a lot of what they call CMEs, and CME stands for corona. It's the corona, the outer shell of the sun. A mass ejection, and what happens is it spits out parts of the sun. Just in photons and protons and electrons. So right now we're in that period, and when the sun controls like 99.9% of our weather on the planet and the whole solar system. So when the sun has these different eruptions, it influences our planet. Rain, lightning, earthquakes, the whole bit, temperatures. And so right now we're going to get hit over the next 24 hours with somewhere between midnight Eastern Standard and going into early morning. We're going to start getting hit by a lot of particles from the sun, and it will instigate more earthquakes like it's been doing. We've been getting hit by it now for a couple of weeks. It's just been pounding the earth in different spots, where it's aimed at, where the sun is turning and the earth is in its way, and it hits it, and next thing you know is, you have all kinds of wild weather events going on, like California is getting some places as much as 7 foot of snow, and, just the whole planet is being roughed up by the sun. That's how it works. All right, from there we go over to watching how the Turkish lira has been gaining. See that right there? Turkish lira has been gaining against the euro because the money is pouring in because of all the, calamity and the pain that Turkey's receiving from Mother Nature, from the sun. She's just pounding the earth. And so, those earthquakes and everything are just making it harder. And some of the mathematicians that do, space science see that part of the planet being much more vulnerable to the sun over the next 20 years. So that's it's not a surprise to me that they're seeing it. Probably the surprise more than anything else is that no one's talking about it. That's the amazing thing, because it's kind of like everything else. If it's not politically correct or politically linked with the certain people in politics, they just refuse to even discuss things like that. So that's where we're at now. And you can see here the euro against the Turkish lira has been dropping, and you can see it's buried down here. Let's make that the whole page. Right there, you can see it's buried down here. It's underneath there, and it doesn't look like it's trying to dig its way out yet. And this is what? This is the weekly. Let's put the daily up. And this peak here, which is interesting, is the first blast from the sun that hit them and gave them the earthquake, and then we got a blast again about a week and a half later. Another earthquake. It wasn't aftershocks. It was a whole new earthquake formation. What happens is that when the fault lines, when the sun fires out all this extra energy, like normally the sun, space weather moves around 250, 275 to like 400 kilometers a second throughout the day. Okay, and then when they get these extra energies from the sun, then it jumps up to 800 kilometers a second. Nobody wants to have their party spoiled. Yeah, I hear you. So watch out. What do they usually say? Watch out below then. It's gonna come no matter what.
Market data connection.
Yeah. Well, that's what that does. If IVB, what it does. It fits the rest of the first part of the scenario that I talked about. One size fits all. As far as leadership on the planet, to a great extent, and financial systems, they want one size that fits all. They don't want change. They don't, in other words, as far as they're concerned, the sun probably should stay up all 24 hours. Forget about sleep. You just close the window shades. In other words, they want one size to fit everything. Everything. Matter of fact, my son-in-law's uncle texted me this morning about some, space weather, and I sent him over stuff about Birkeland and Birkeland currents and the Z-pinch, and I haven't heard anything since. But I'm sure he'll be coming back, and totally fascinated by it because he loves hearing my point of view, and I present the science and the physics to it all, and it's amazing. There's just silence in the science community. I mean, we have the electric universe, and we have some, we have about a third of the NASA scientists on our side, and we have, a lot of we have some Nobel Prize winners on our side, so forth, that actually talk about Maxwell and Faraday and Coulomb and Ohm and all the volt. All the, electrical science of the sun and the universe, and then you have mainstream physics itself that just turns their head and doesn't even pay attention. Just totally oblivious to it all. They choose not to listen, and they choose not to pay attention. So they're paid to. The government gives them money to stay on theme of gravity, and like the sun is some type of different process than what it really is. Anyhow, there is the Turkish lira. We're finishing that off, and it's literally correlates right to the this bounce up correlates to the earthquakes right there and the activity of the sun. There used to be some analysts that actually used to follow sunspot activity and the markets, and ever since quantitative easing, it's really had a negative effect on on that process. So, because QE, they can come in. I mean, they lend some of the biggest funds in the world. They don't need the money, but they have this philosophy that if you only give money to companies that need money, then people will know who the weak companies are. So instead, the central bank, especially here in the United States, the Federal Reserve, gives money to everybody for free. Every major firm and bank has government money in it from the Federal Reserve, and they have it there for free. And they just have to, they take it and they use it for free. I mean, if someone's going to hand you $1 billion for overnight trades, why not? Put the position on and enjoy it. For free, why not? I'll take $1 billion for free. Alrighty, from there we jump over to the two currencies that have that follow along with the commodities. One is the oil, and the other one is the gold. So we'll take a look at Canadian first. Right there, there's the Canadian, and let's close this down to there. There's the Canadian. You see it? The Canadian's been moving up, which means usually that oil has been moving down. And so we'll go over and take a look at oil at the same time. Let's put oil up on J4X. Right there, light, sweet Texas crude. And you can see, as oil goes down in price, Canadian goes up in price. And that's how the magic works there. And then you can see the last 2 days, they're starting to put a little push into the, I think we're going into a daily buy today as we speak. Let's take a look at the April contract. If I can find my mouse again. There it is. Right there. And right there. And there is the April contract. No, that's not. Right there is the April contract. And you can see it went into a buy on Friday. And it's pushing down a little bit here right now. It's down for the day. It's in a weekly sell for a few days here. Or a few weeks, I'm sorry. This is the third week. So oil itself is kind of stalled. I guess the summer season's coming on. The world, the United States has been really cold, so that's really, hindering everybody. A little sip of the tea again. So you can see here, energy overall, though, has been in a sideways chop now since, I guess you could say November. And even then, if you widen the range or look at the range, I mean, it's between the high 80s and the low 70s. It's just been cruising around in here. Bouncing along. Watch the bouncing ball. And then from there, I think the back month, since we're already into it, let's see it. Back month is trading at 76.01, and that's the June contract. And then the April contract is at 75.85. So it's got about a 16 cent premium to it today at the moment. And then from there, we go over to the gold. And we'll put gold up on J4X. Right there. There's gold. You see gold trading at 18.12. 11s are bid for. And at the same time, we'll put up the South African Rand. There's the South African Rand right there. You see that just keeps on making highs. As the South African Rand loses against the dollar, which means it's rising, this is against the dollar here, you can see gold has been dropping like so. And not counting the we're not hearing any of the news, but at this point in time, the politics of $500,000 in cash found in the president's sofa underneath a cushion has got it freaked out also at the same time. That's why we have those lines up in there. All right, and then from there, I guess what we do is we go to the last of our least, and IVB, I think you'd enjoy this one, and that is the Mexican peso. The Mexican peso has been extremely predictive and in very successful ways. It's reading the American economy. You can see here we're making lows again for the last 5, 6 days, 7 days, almost 10 days now, I guess. What's that? 3, that's 6, that's 7 days now. And we're in a weekly sell since up in here in the 19.5 area. And here we are trading in the 18.3-ish area. And it's predicted pretty much every move that's going on in the United States over the last 6 months very nicely. And when the American economy looks like it's starting to turn up, gain in profits and growth and better policy, the Mexican peso seems to do better against the dollar. And when we look like we're doing our stupido stuff, where we do foolish things, then obviously the peso loses value against the dollar. So it's a good indicator of, as long as it keeps on dropping, I'm happy, because that means I want a more valuable Mexican peso. It usually insinuates that the economy is going to get better here. So, and the politics is going to get better here. All right, that does it for the currencies. We've got them all done, I guess, didn't we? We did, we did them all. If anybody wants to see anything else, just shout it out. We'll go take a look. And then from there, we'll go back into the, there's crude oil. So we'll take a look at the energy market first. There's crude. And let's put North Sea oil up there. There's North Sea oil trading in the, no, that's not it. There it is, right there. North Sea oil. There's Brent trading at 82.27. Pretty much firm, I guess you could say. In the 80s. We're in the 70s. There's usually about a $5 or $6 discount between the two. And and I guess combined with all the other issues on the planet from what's been going on, energy wise and solarly, the whole solar system's having issues. We can point each one of the planets out and the dramatic shift that's going on each one of them over just the last couple of years. So we're coming into something, let's put it that way. Speaking of which, Voyager 1 started recommunicating with NASA yesterday. It's the furthest spaceship that we've ever built that's gone outside our solar system. It's out in what they call interstellar space now. It's about 16, 17 billion kilometers, or I think it's mile. I think they measure it in kilometers. So I think it's like 17 billion kilometers. I think it's in miles. So it's a faraway place, cruising along in interstellar space. Oh, there's Timothy. Let's put it up on the screen. Let's see what's going on with the CAD. No, it's not the CAD. It's the cable. That's what it is. So open Sesame, open Workspace. Oh, you know what? I don't think I sent it to you this morning, too. I forgot. Sorry about that. We'll send it out after the webinar here, too. Well, you'll be able to see it, so that'll help out. But I'll send one over to you. I'll have Robin send one out in a half hour or so. Maybe an hour, something like that. Give you another view of it. Let's see. Let's go to it. Let's see. Open Workspace. Right there. There we are. And here is the 15-minute cable chart. What is that? There it is right there. We went into the buy here. Was that the European Open maybe? Yep. Switzerland and Frankfurt and Berlin and not Berlin, London and Milan and all like that. They were all starting. Amsterdam started trading, and that was right there. And went into the buy. It fell into the sell here on that one. And then got back into the buy right there again. And that's where it's at now. We're in the buy still for that move. So it's been buy, sell, buy. And so you can see there, let's make a copy of that. So as we look around on the other products, you'll be able to see it trading live. Is that the way to do it? Yes. Okay, so we were looking at what? Energies, right? So we go like this. What we'll do is we'll close that. Close. And then what we'll do is we'll go into, wait a minute, did I end up closing something else? I closed something else that I didn't want to close. Open. There we go. Let's get this up on there. And then, I see, that's how we do it. We go like this, and then we go paste. There we are. Then we break that away. We go like that, we go like that, and then you can see the both of them on the screen. So you see here, it's still flirting with the buy. Over here, you can see the, what is this? This is the energy sector. So we're looking at energies right now. So, you know, oil is kind of a little weaker today. It's still in that weekly sell. And then we take a look at nat gas. We've moved over to, in the nat gas, we're in the May contract. You can see it's been in a buy now for 3 days and looking very firm this morning. They tried to take it down. It obviously didn't work. And you can see the weekly and everything is looking very, very, very firm. And you can see the fast algo is way above. And so now the slow is doing the same thing. They're both joining in. All right. Now from there, what do we do from there? We go to, so we did what? Natural gas, and we've done oil. We've seen Brent. Okay, so from there we slide over into the metals sector. Let's take a look at gold again. There's gold. You see gold's dropping down. And let's see, let's put gold over here on J4X. And then we'll go to silver from there. We've already seen where against the South African Rand that it's dropping. And there's gold, you know, just dropping down. And then at the same time we go and put the silver in there. There's silver. Silver's doing this, having the same issues. As much as it tried to get going, silver has rolled over. And then from there we go to over here. Let's put silver up on the screen. And there is silver right there. You know, same thing, same pressure. Been in a weekly sell all the way back into the 24 and change area. Now we're trading in the 20 and change area. It's like $3.75 lower now since the weekly sell. You know, it's been only 1 day of a buy right there. So basically, it's went into the weekly, the daily sell back in January, and we've had only one daily buy, and then it rolled right back over the next day and back into the sell again. So the metals, again, interest rates are a big factor there. You know, when interest rates rise, metal contracts, you know, like gold and silver and platinum and so forth, all have issues, and so they start to knock them down. Okay, so, and then from there, let's see, where do we go from there? We can jump over to the copper. Take a look at the copper contract and see what they're doing with that. And so here is copper right there, and it's breaking down. We always say that when we see copper, we think of, you know, China, you know, because it's like the gold of China. Now you can see it's firmer today than it was Friday, right there. But at the same time, you can see here that it is underneath the $4 area. Now let's put it up on J4X. There it is. So you see this pressure going on here on a daily. And, you know, and China's, like I said, China's in a very tough position. You know, it wants money and it wants growth, but it doesn't have the policies to support it. And that's the problem with, you know, China's issues, is that they're kind of trapped. You know, it reminds me of the old Jimmy Durante song. Should I come or should I go? They're not sure which direction they're going in. All right. From the copper, we'll slide over to the platinum. See what platinum's doing. Platinum is usually a leader on the metals market. Usually gives us a good heads up where the metals contracts are headed. And so there is platinum. And you can see went into the daily buy there for a bunch of days, but fell down on Thursday and Friday of last week, and here we are now popping back up a little. But we've been in that weekly sell since the $1,000 area, and it's dropped over $100. And then palladium, boy, I was looking at the palladium. We have a client that likes looking at palladium, and I was like, wow, palladium is amazing, just amazing. Look at that action in it. And there's palladium, and it's come down from, let's see if we can do this, tighten this up. So palladium has come down from 2,000 in late December all the way down to 1,400. Matter of fact, Friday it was down at 1,365. It's dropped $600. It's lost 1/3. That's amazing. A 33% drop. And it's only been in a buy since the weekly sell back here in December. Went into a weekly buy for only 1 week, failed, and back into the sell again. So it's been basically, falling or sideways for, what's that, 3 months, 3 solid months. All of December, all of January, all of February, and now we're heading into March, and the product has been just getting beaten up. All right, and then from there, I guess that's it. The palladium was it. It finishes it off. So what do we got left? We've got a few minutes left. Oh, we also have data coming out today too. I think there's more economic data. It's the end of the month, so that'll put a little charge into the economy also. Oh, it's a IVB says laugh out loud. Okay, on what's that? Not sure what you're laughing at, but I'm sure it made sense. Let's see. Timothy says, Doc, in your opinion, how does one know whether the trend is in reversal mode or it's making a pullback? Good question. People use a combination of Fibonacci. They use, I'm trying to think of what else they use. Have the technical analysis. In other words, if it breaks a certain area. Also, they use trend lines. I guess you could say they use percentage of from all-time highs to all-time lows. That's why I always say the Chinese economy is in really dire strait. The stock market is almost 60% down from all-time highs. So in other words, as bad as some of the Western countries have been in the equity markets, Germany is not, or England is not, or the United States is not 60% down from all-time highs. And it's been that way for almost a decade now. So in other words, it can't. Matter of fact, even what was fascinating is out of this last move on the upside in Japan, they were 4 decades underneath all-time highs. I mean, they went down from 39,000 down to like 7,000 on the Nikkei. Now, there's no doubt there's some currency translation going on there too. But, I mean, just a generality, you would think that they'd find a way to get back up to that 39. And this last big move, over the last year and a half, had brought them to, into the 30s. So we started actually getting close to the all-time high again, whereas we don't see that in China. China is, at best seems to get to be about 50% away from all-time highs. Maybe in the 40s I've seen at best. That's still almost 50% away. That's a lot of damage. So trying to understand the overall, let me reread this again. Reversal mode, the trend basically. You're saying what you're really asking is, how can you understand the trend? If it's a dead cat bounce, we refer to it here as a dead cat bounce, meaning that there's no real energy. If you see, also the one thing I don't usually follow that much, we don't talk about that much, and that is volume. When you see prices rising and you see prices rising and then volume increasing, that tells you that the trend is obviously on the upside. That's obvious. But the thing is that if you see volume dropping and the price moving up, then we refer to that as a dead cat bounce. In other words, it just means at one time when they started building apartments much higher than just 1 or 2 or 3 stories, cats would actually, people with pet cats would, a cat would fall out a window, 15 stories or 10 stories. And sometimes the cat would actually live, which is amazing. What an incredible creature. Uh, but, sometimes it would die. And it would hit the ground and then bounce up. It didn't mean it was alive because it bounced up. It just meant that it was just a reaction to the density and the shock, and the wave itself. You know, so when following, I use when we look at J4X. Let's go over to J4X. When we go to J4X and we look at like a weekly, you can basically say, okay, like in this case here, we're looking at copper. And what's the weekly been telling us overall? It's been an upwardly trend. The main trend here has been more up. The lows, don't take out the old lows. New highs are evolving from this high. So you look back at the previous high, and this high is greater than this. Now the question is, will this go challenge this low right there? The last low of the red bar, that type of thing. And if it does, and then that starts, and then it bounces up, but it doesn't take out that high, and then starts to head south again, that's a downtrend. That's the downtrend that's going on. So it's kind of like a generality. That's why our math always recalculates every week on a weekly basis. Our math, we follow weeklies. How long, how many weeks we've been in a buy, how many weeks we've been in a sell, that type of thing, and it tells us what the trend overall is. And then the daily trend is obviously much thinner. You're dealing with much shorter term situation, and obviously, Timothy, you're trading in a 15-minute frame. So you could say that a long-term trend to you is like a day or a week, whereas money managers who are trading, they're looking at monthly and quarterly, and so the little noise that occurs on a daily basis is just background noise. They may find a weakness as a reason to buy, unless there's some fundamentals that have changed to a company. Its earnings and sales and things like that, or the inflation, growth, all kinds of good old-fashioned fundamentals. That doesn't really alter it. I hope that answered you on some level. We can, and you're welcome to ask that question again, like tomorrow and so forth. We can keep on exploring. How do you define a overall trend? The trend for you, is obviously on a 15-minute basis. So you might be looking at like a 2-hour trend, and that might be your daily to the weekly, and your daily would be the 15-minute in a sense. Somebody else, depending on how they're managing money and trading, have a different perspective of what the trend is because of their time frame. It comes down to the time frame itself. So when you ask, how do you decide on the trend? In your case, probably looking at, daily would be like looking at a monthly for you. Compared to a money manager. So it all comes down to your reference frame, time-wise, and then volume, and taking out highs, taking out lows, that type of thing. In other words, going beyond each one of those, or one of them. I hope that makes some sense to you. As IVB would say, ¿Qué pasa? Let's see, where do we go from there? We were looking at palladium, right? So let's go over to the stock indices before we get out of here. We're going to have, like I said, we got economic news coming out in 4.5 minutes. But let's take a look at the S&P 500. You can see here it's flirting with a daily buy. The overall trend has been on the upside, but right here it took that curve with the daily sell and took out the, like 5-month highs or something like that. Is that what that was? Something like that, yeah. So there was the last time it was up in that area, and that was in September. So there's the September high. It went up to the September high, and now it's coming down. Now the question is, will it support here or here or here in those spots? Let's make this bigger again so you can see that again. So in other words, where's your September high? There's your September high right there, and you can see here it challenged it, came down, but didn't challenge this low here or that low or that low. And so as it turned back up again, we were looking for it to take out these highs, and it did. And now it's breaking down again. Now the question is, will it take out? Let's move that out of the way like that. Let's see if it will break down to here or take out here. And that would insinuate that the trend is on the downside again. Let's see, Timothy says, that's where I keep getting trapped. Just a general trend. Well, again, you got to, what research put you into trading in the 15-minute period is got to be the key to that decision. In other words, you know, what gets you in gets you out, in a sense. That's what we like to say on the old trading floors. So in other words, if you had an idea, that idea made you buy something, then you sell it because of that idea, not because of a whole new idea. In other words, it didn't do. When you're looking at a position, you want to know what your entry is, and you want to know what your exit should be, and what your profit taking should be. You should know all three of those things. And so in this case here, you're trading 15-minute. What gave you confidence to invest on 15-minute time periods is the rationale of how you'll decide how to find the trend. Because if it's 15, I would assume you look at a broader range, like, you know, hourly or 2 hourly or 4 hourly or something like that, and then you back test that to see if it holds up. You know, for ourselves, we use a spatial bar, so we don't use in Newtonian minutes. We use in basically like a topological time frame. So I hope that all makes sense to you. What do we got here? We got 1 minute and 25 seconds. Let's see what they do, and we'll see how your 15-minute chart moves. And let's put where's it at? Let's go to here. Is that it? Right. Let's close that. And then let's go take a look at the intraday. Right there. Right there. There we go. And there's the intraday. You know, we're at the highs of the day here. Let's give you the bigger one of the two at the moment. And oh no, let's do this. Let's go the reverse. Let's give you this one right there. There we are. And as you can see here, they're coming off. You know, about a minute and a half ago, it backed off. It got up to 99, was it? Yeah, 99 high, 3.995. It almost hit 4,000 again. Now we'll see how well that, you know, we were looking for the 360 to be a support area. It was. And we'll see if it gets, you know, I think the best we can get to is maybe the 460. We'll see. We'll see if that works out. We've got, what do we got here? We've got 18 seconds. And then we've got some economic news that jumps out. So let's see what that does. And I'll take a sip of my tea, and it seems like they're pushing it down a little bit, so we'll see what they're doing there. There we go. The numbers are out. And it doesn't seem to be having too much of an effect. They're not exactly exploding like they did last week in some of the news that came out with CPI and all that stuff and PPI. It does seem like there's more pressure on the upside. They tried to sell it down, whatever the number was. We'll be seeing the stats on that in about less than a minute. They'll be posting the numbers themselves. You see here, it's still on that upwardly trend. For you, over on the GBP, looks relatively flat. So it didn't seem to disturb it in any real fashion. And you see here, yeah, it's moving back up still. Trying to get into the buy as we speak right there. Maybe we'll take out the highs here now. Let's see. Mrs. Yellen, our Secretary of Treasury, is saying she thinks that there's going to be a soft landing. But then she also said that inflation wasn't going to be around long. It was going to disappear in 3 months. And here we are 2 years later. And it's hurting a lot of people. Okay, looks like they're gone. They made a new high in the stock market here. That's the S&P 500, and then they dropped off of it. And here's durable goods, 4.5% down. Estimations were going to be 4%. Okay, January durable goods up 7/10, and the estimation was going to be 0. Wasn't going to be changed. So they're the numbers are nowhere near what they were expecting. January core capital good orders up 0.8. They were looking for 1/10. So what's that mean? The economy is still humming along. Remember, the Federal Reserve is trying to slow our economy down. And that's their objective, really. January durable goods down 4.5% overall, month over month, compared to 4%. So that one declined. The others lifted. So that was the Christmas. Was that the Christmas month? Because this is the February, or this is the January numbers. That's what this is. This is the January numbers. So they dropped overall month to month because of Christmas. That makes sense. So this is January durable good numbers coming out at the end of February. They're usually a month behind. They're lagging indicators. And January core capital goods orders were up 0.8 month over month. So as you can see here, the stock market seems to be trying to move up. No problem, IVB. No problem at all. All right, traders, we're out of here. We will catch you all tomorrow, same time, same channel. So this is Doc saying happy trails to you until we meet again. There's the S&P going up more and more. Happy trails to you, to all our trading friends. Later, traders. Looks like they're looking over the month to month, and that's exciting them, saying, oh my goodness, the economy is slowing. But then you have Christmas numbers in there, so. All right. Ta-ta.